Hi everybody, and welcome to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. A couple of things today. As always, please remember to like this video, and if you haven't done so already, you can subscribe to our YouTube channel to make sure you get these videos every Friday. And again, thank you everyone who liked this last week. This week, I promised you a special look at how a growth stock bear market can unfold. I'm going to go back to the market peak in 2000 and look at one growth stock in particular, which never missed a beat in its sales and earnings growth in the subsequent 5 years after the market peak, even as its valuation in price-to-book terms plunged 88%. You will see how the market let the shareholders down nicely. Yes, there were a few nasty moments, but they were punctuated by all sorts of promises of good things to come. Today, the FANGs are very expensive and way above their fair market value metrics, but they're all growing nicely, and as far as I can see, that's not going to change. So how is tomorrow's market going to bring them down to earth? Well, we're going to see how it could be done. And by the way, if investors allow themselves to become traders for a while, you may be able to do very well in a bear market. Finally, with a total market capitalization of Apple crossing the $2 trillion mark, can things go much higher? There's a lot of controversy about how expensive the shares are. But next week, I'm going to lay out for you a roadmap of how Apple could double its market cap to $4 trillion, and it looks to be planning to do just that. We'll go for a ride on the Starburst Express, and I'll show you the bull case for the stock, as only SVA is able to do. Finally, as a reminder, if you've been watching FANG Friday for over a year now and want to take that next step and send us an email outlining where you are in your investment journey, then just email at strategicanalysis.ca. Anyway, with that in mind, let's take a look at the FANGs. Well, the first FANG is Amazon, and look, it continues to struggle against that HB4 price. It popped up just a little bit actually earlier today, but is right back down there again. So, of course, it is a hold because we had bought it in its putative breakout a few weeks ago, but we still don't have a real buy on this stock. Facebook, well, I'm waiting for the bubble price, and that, of course, was the peak 3 years ago. I don't see anything going above that right now. NVIDIA got right to our HB4 target. That's 20 times book value, and that was the old peak. Well, today it's trying to break out. So this is really, really interesting here. Netflix, what can we say about Netflix? What an annoying stock. It did break out initially on the kind of the COVID promise, but whether it's the weight of Disney or what, I don't know. It bashed right back down again, and it just remains stuck under its HB4 price. So nothing promising there right now. Apple, we're going to talk about Apple in detail next week. Alphabet, well, you know, we've said before, look at Alphabet, look how high the stock gets above its low super growth price. That's 4.5 times book value. It never manages to advance to its mid super growth 5.5 times book, and it's going to be interesting to see whether it can this time or not. Finally, Microsoft, same story. Look at that. It's right up against its HB2. That's 12 times book value. Well, remember when we started FANG Friday last year, we watched Microsoft banging and banging against the ceiling. It took some while for it to break out, but of course when it did, it immediately surged one full breakout, which of course is 28%. So that was well worthwhile waiting for it. But we had to wait for it to happen. Well, it looks like it's trying again. A little more promising because it keeps breaking out, but it keeps falling back. Nothing confirmed as of yet. Anyway, I promised you a short episode on what I would call how do growth stocks die. And General Douglas MacArthur actually once said, they don't. Like old soldiers, they just fade away. And we are going to see how Coca-Cola faded away from its peak at its HB5 price way back in the late 1990s, early 2000. And look how this growth stock came down. But before I do, let's take a look at the structural pricing. Of course, that's the growth of the book value. And let's take a look at the fair market value, and it just moved right nicely along, okay, with the growth of the structural prices. But the valuation themselves in price to book terms followed a very interesting trend. It dropped 2 breakpoints, rallied 1, dropped 2, rallied 1, dropped 2, rallied 1, dropped 2, didn't quite finish a good rally, and then finally had a last drop. Now, imagine if you were in that stock, okay? Now, this is a nasty moment here because to drop from the HB5 to the HB3, well, that's a drop of 40%. But look, immediately it's punctuated by a lovely rally of 28%. Then it just kind of fades away, and then it takes another drop, but it immediately rallies again. So even as it was fading away kind of underneath your feet, the stock kept giving you lots of promise that something good was going to happen. And for those people who stuck it out, full of promise but no delivery, by the time that they had finished in 5 years later, the stock had dropped, as I say, 88% in price to book terms. In price terms, because of the growth of the balance sheet, however, the stock fell from essentially $40 down to about 20. And I could see going forward that the same thing might well happen to some of the FANGs, and of course, the FANG that I think that this might be most applicable to would be Amazon. Anyway, in conclusion, Amazon remains on the fence, right at its HB3. A bit of a conundrum. No breakout yet. Nothing committed to going higher, but promising. Microsoft continues to dither at its HB2 price. And remember how long that took to break out. Well, more of the same. And finally, Netflix does not appear to be willing to hold in and head any higher. On the buy-hold side, however, Facebook remains in an uptrend, although please note that target at its bubble price, its old high at 7.4 times book. Last week, Nvidia was closing in on its high, and I said I wouldn't count on it breaking out there. But we should never rush to prejudge anything in the stock market. Today, it seems to be trying to do at least just that. And Apple just keeps chugging along. Finally, Alphabet did set back and tested its breakout, but again, the evidence does not suggest that it's going to reach a full breakpoint higher, its MSG price, or 5.5 times book value. So, you know, it's okay, and you're kind of growing in line with the book value, but you're not getting the leverage due to an increase in the price to book. Anyway, I hope you've enjoyed my discussion of Coca-Cola following the last great bear market. That analysis is not theoretical in the slightest. Amazon already shows preliminary signs of repeating that experience, although I would not wish to draw any hard conclusions right now. As far as you are concerned, however, SVA is an ideal source of information and support to get you through a bear market. And as you saw, bear markets need not be as scary as they sound, offering lots of opportunity for positive trades. Anyway, if what you've seen has interested you and you would like to see what your own stocks are telling you, and if you want to take the next step in your investing journey, as so many have done over the past few months, then send us an email at info@strategicanalysis.ca. Clients get a lot of benefits, not just access to over 3,000 charts of North American stocks, US and Canada, but also daily comment, trade ideas, and weekly webinars when we go into the nitty-gritty details of how to use the charts to become a better investor. When you sign up, I will personally take you through our system on a one-on-one video conference and show you how to use it to become a more confident and profitable investor. If this sounds like something you think is in line with your goals, then let's take the next step together. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. Have a good week. I'll see you next Friday.